Welcome to TradeTheNBI.com. This is John's report is for the 3rd of May, and well, the fears of debt ceiling blown out of proportion. It's just a question of how much it's going to be, not whether they're going to increase it or not, and what the conditions are. But that sparked a strong move of NBI white above magenta, and that definitely is negative. So move below 33 for magenta MBI and or yellow is definitely going to increase sell pressure. The interesting part of it, though, is that you have orange spiking all the way up. So it's on its retreat. So any pivots back up of orange are only going to accelerate it. So we'll be watching that because that's going to become a significant precursor. And as you can see, we made higher highs, lower shakeout. Never a good thing. When we turn to the NQ, much stronger in general and doesn't quite have the same thing, but 52 on the MBI magenta. So that's going to take a while to ease off. So the NASDAQ may be enough to keep the S&P from breaking key supports in that. And that will be significant. It's pretty much been the leader of the last many months and has pretty much been enough to hold the S&P from having more serious pullback. Treasuries, of course, huge flight back into them. Typically happens in sell-offs because park your money in somewhere and preferably safe place. So treasuries is usually the ideal situation. And of course, the belief is that the Fed has peaked. So getting those rates would seem like a bonus. Comparatively speaking. Now, this is a significant one because this drop in oil over the last week plus has been significant enough to, head back towards the fill of the dip below the red line, all the way down at the lows, and that would be a significant improvement from an inflationary standpoint, and also from supportive business. So that this is what we've seen with these waves back and forth. It's just been long enough to, keep the economy going instead of caving in. If it had been, that straight line above 80 and held over the 100 for any extended period, I think definitely would have seen more weakness. So, all things being equal, it's been enough to hold on for now. Gold spiking, obviously, on the debt issues, and of course, most major currencies are going to love that move, including the euro. Just a weakened dollar from that aspect of it. Even if they get a debt ceiling approved, does it look like that's going to change? Not likely. I mean, deficit's running out of control, and yes, you're going to have budget squabbles, but they're only going to agree on how big the deficits are, not eliminating them. So it's sort of just theater at that particular point. Bitcoin and ETH should likewise do the same. Move back up towards their highs, particularly if there's any extended length, if they push the haggle towards June, which is now the expected default time, and there'll be some kind of brokered arrangement and a lot of name calling and the usual. I mean, we go through it every time there's a mixed government, and it always gets resolved in the end. Of course, my TS had just been popping in and out after having it resolved, so I have to wait for the intraday charts to go up. I was talking about how what I do is because it's been an ongoing issue, is I've gone back to some of the restore points that I've had previously, and that seemingly helped, but then it randomly did backup that I have no request for backup on, and that was strange. But what I'll do is I open up the preset TradeStation futures charts and then just convert one of them to tick chart, because it seems like it's only an issue with the tick charts for some reason, the delay in promulgating and that and then popping up. So that seemingly works most of the time, and it was doing well for a while, and then just that random update just does not work for some reason. But that's neither here nor there. As always, though, you can look for me on the Skype chat. Trade well. We'll talk to you later.